Hi, welcome to another episode of Captain Finance. Don't worry, Yashwant is still here. I am just here in this episode today to ask Yashwant a few questions about startup and finance. Hi Yashwant, welcome to your own channel, Captain Finance.
Thank you, Satvik. Thank you for being here with me on the show.
So basically, I just wanted to do this episode, ask you a few questions about startup and finance. We've all been listening to a lot of terms, especially when it comes to startup and finance, burn rate, calculating revenue, year-on-year growth, a lot of financial terms, especially when it comes to startup. And I just want to know what, according to you, is like the most important thing that a startup should track or understand when it comes to finances.
So I think for a startup in any stage, irrespective of any industry which it is in, cash is most important for the startup founders or the team to track, right? Because the moment you are out of cash or you are foreseeing that you will be out of cash in the next X number of months or years, then you either have to do something about it or you're out of business and the startup is dead. So I would say that tracking cash is the most critical thing that a startup has to do.
But tracking cash in itself is a very, very vast subject. I mean, it's not something, there are many layers to it. So if you were to say that, okay, this is the most basic thing in cash that the startup has to track, what would it be like when it comes to cash especially?
If one analyzes, one should know what to look for, right? And it is pretty simple. So the basic thing or the most basic thing one should know is the bank balance, the money coming in and the money going out, right? So this is the most important three things that one should be aware of at any given point in time. With this information, of course, you can actually calculate several other KPIs like your burn or your runway and your growth rate, which will definitely help the business drive in the right direction.
Perfect. Now that you mentioned burn rate, I think that's one of the most popular buzzwords. So when it comes to burn rate, this is one of the questions that I have. What exactly should the founders track when it comes to burn rate? Are there specific things that they have to track? And two, what are the common mistakes or pitfalls that founders or startups tend to do when it comes to burn rate?
So in simple terms, burn is money in minus money out, right? So if you are positive, then good. But if you are negative, you also have to understand or figure out the timeline within which the burn becomes positive, right? So the important thing with burn is determining your current burn rate, right? I mean, one should not lie to himself or herself. So you should actually know what your receivables are like, right? And your current bank balance, of course, remains constant. You should also know what your expenses be like. For example, if you are spending, say, 1 lakh rupees a month, for the sake of calculation of burn, you cannot assume that or calculate it to be less than 1 lakh or 85,000 or 50,000, assuming that the expenses would reduce, right? It has to be based on actuals, and if you are calculating it for a period of 3 months or 6 months, you should calculate it based on your actual estimated expenses and not based on any optimistic assumptions.
Understood. So basically you're saying that be honest to yourself, whatever you're spending or burning cash, make sure that you take a note of it so that you get a correct picture of your business.
Right.
So, okay, one side is the burn, right? So on the other side is also the revenue growth or calculating revenue or predicting revenue. What is the right way to calculate revenue?
So now that we have a burn, I think I can get into the other two aspects which are critical. One is the growth rate, of course. Growth rate, I think, for at the initial stage of a startup, it is most recommended to track growth on a monthly basis. It is simply revenue in month one minus revenue in month 2 divided by revenue in month 1, right? So that will give you the growth rate. This way, you will actually know how your burn is going to get affected, and you will also have an idea as to what sort of working capital you will have to pump into the system, right? So this is number one. And the second thing is runway. Runway can be calculated by dividing your bank balance and the burn that you have actually calculated, which will basically give you the quantum of time that you can sustain without any additional inflow of cash. right? So if the runway is say 6 months, you will actually know that for the next 6 months you can sustain with the kind of burn that you currently have.
So now that you mentioned these 3 points, Ashwant, one is your burn rate, two, revenue growth, and three, the runway. How can these parameters help in decision making?
Okay, so there's actually a very useful question for startups, especially at the initial stage. So if you actually look at a graph, right, with the x-axis and y-axis, if you have your expenses more or less constant on the x-axis, and you have your revenue which is growing at a particular rate on the y-axis, so the place at which the x and y axis meets, right, so that would actually determine the point at which you will actually start generating positive cash flow, right? So you will, with this you also have the figure or the amount of quantum of capital required till such time you are positive. That is to say that if your monthly expenses is 1 lakh rupees and your monthly revenue currently is 20,000 rupees and your growth is say 20%, right? So you will have to sustain over the next 2 to 3 years in order to be cash positive, and all the losses that you will be incurring over the next 2 to 3 years will be your actual working capital required. So if you are able to bring in that kind of funds, or if you already have it, then you are at least safe, and you just have to focus on achieving the growth rate which you have projected. Otherwise, it is going to be a very nasty situation.
What I'm hearing you say is that at the basic, it's very important to understand these aspects of business when it comes to finance, and more importantly, it is very important to track these aspects of business, whether it is burn, whether it is revenue, your runway, or all these things. It's very important to track. Is that what essentially you're telling us?
Yeah, that's right, Satwik. So most of these figures is something that we have very easy access to, right? You don't need a professional or a consultant to actually give you these numbers. You have, I think the promoter or the startup is the best person to actually come up with these numbers, and with a simple analysis of these numbers, one can definitely know what is going to happen in the next 6 months, whether you will be needing more cash, or whether you have to grow your business a little faster than what you are actually having in mind. And I think the whole decision making process becomes simpler.